How are you all? Hey, out there. It's a gorgeous day today. It's not like I'm on vacation or anything. It just, I couldn't go to work and my hubby got a fever after attending my niece's wedding. So now here we go. Hopefully nobody get COVID, right? But it's so close to home. So I'm home, okay? And today's webinar is kind of lighthearted. Why don't you just enjoy with me of this good weather? And hey, look at the backyard. It's really nice. Big trees. And this is the old area of Des Moines. With tax season coming, the extended tax due day coming through, right? If you have filed extension, now is sort of the time to start looking at your tax return. And I want to kind of go through this tax due days with you because a lot of times people think of tax due day too lightheartedly. I'll tell you, tax due day is really, really important, not because it's a due date you have to meet it. It is it is everything related to the due date. The tax calculation is also different. So, for example, if you remember last year, and the 1040 was delayed, right? 1040 used to be what? Used to be due on April 15th. And in 2020, for 2019 tax return, remember the due date was actually July 15. So what does that tells you? That actually give you a way to know that, say right now, you didn't file 2019 tax return. So you're thinking, oh, I'm late, I'm just late. So you're calculating your late charges, late filing fees based on April 15, 2020? No, you should go for July 15, 2020. So you will have a lesser of the penalty, lesser of the interest expenses that would face you. So those are the things why due dates are important. So when we work with clients, if they came up with 3 years, 4 years tax return they didn't do, and those years are coming through these pandemic years, we call them, and we would actually not relying on the software. You cannot rely on the software. You really do have to calculating that manually to know how much cost that there really is for your client and for the late payment. So there's three big penalty that IRS would impose on you, right? Other than interest. Interest, we know. Interest is something that you're gonna pay anyway. If you owe IRS money, you didn't pay, they charge you interest. That aside, IRS has this penalty related to due date. So on April 15 and after, if you didn't file tax return, you have what they call the late filing penalty. That's number one. Number two, if you owe taxes, there's a late tax payment penalty, right? You're late. You didn't pay your taxes, so they will be like, okay, you're late. We charge you for paying late. And then there is a third one. It is what I called the interest one, the interest charges. Of course, if you are a taxpayer, you always owe taxes to IRS. Then you probably know about estimated tax payment, right? And if you're late for that, you have a penalty for late estimated tax. So all of these things I'm talking about is related to due date. That's why due date is important, not because you remember, not that just the April 15, it's actually the July 15, it's actually the May 15, May 17 actually. This year for 2020 tax return, folks, you know that, right? It got delayed till May 17, and then now it is time to, after you filed extension, now October 15 comes about. That's when you're going to start filing your 1040 for the final due date, October 15. That did not get extended. So, of course, no responsibility disclaimer was a thing too for our webinar. Remember, I always say that because I can guarantee that all things I say is absolutely correct. If I say everything correct, You may not even want to be here because what's the difference between what I say versus what you're going to read just from the textbook? So it obviously has my interpretation in things, so that could lead into things not accurate. Then you just learn from what I say, and I also learn from what I do. I may be thinking something different, but when I really get on doing it with a real case, and the things can turn out to be different because I learn more, I understand more, right? So now let's kind of give you a good summary of due date. You know how in the personal tax due days are very easy. April 15, we all know. If you file extension, you go to October 15. And I want to ask you, what are the reasons people file extension? You may say that, well, because my tax preparer got COVID, so I filed extension. No, you file extension because you want to match your data with what you file. This is what we do for our clients. We want to file extension for you because only now and right now we can go to IRS, pull up your data, or we can go to state to pull up your data and matches your taxes, your tax form with the data. See how amazing that is? Then your tax return is 100%. Like school, right? You got 100%, got A plus. So that's what we are saying. We file extension. And with business, though, it's a little different. One business has physical year end, especially C Corp. C Corp due at the same time, April 15th. But C Corp year end could be different. Not like individual, you normally go for January to December, but C Corp can go anytime. So let's say you have a C Corp that ends in November and that began its operation in December. Okay. Then when you file taxes, and remember that due date would be 4.5 months away from the fiscal year end. So that means it's March 15th, right? Because the fiscal year end is November 30th. So I add 4.5, so that's March 15th, right? And when you file extension, it is always a 6 months extension. So you just add 6 to it, then you do in September 15th. So keep that in mind. If you don't know about the due date, that's my puppy, Peanut. Peanut, be quiet. If you don't know about the due date, you only know about the fiscal year end, and then you will want to understand that the filing date for nonprofit is actually 5.5. Okay, and then when you add 6 months extension, so you just remember all of these ones. For personal, it's 4.5 days away from December, and for C Corp, it is 4.5 months away from the fiscal year end as well. So make sure that you know this is 4.5. Then when you do extension, it's always 6 months. So that's how you know the due date. But for pass through entities like 1065, 1120S, and those S corporations, these are due on September. These are original due dates is March 15. Then when you extend it, it becomes September 15. So make sure you know that you got to finish your pass-through entity first. And on March 15, in order to do your April 15 personal tax return, right? Because it is part of your personal tax return. So you should never file your personal tax return before before you finish your company. And again, at our firm, we literally do not file your 1065, 1120S without getting your personal tax return done. I can tell you that out of thousands clients, and I probably will give you one or two people that in our client list are actually doing their personal return and without caring about their business tax return. So that is just not a practice we normally do. We want to make sure that you file your business tax return, know exactly that is final, and file your personal, know exactly that was your expected before you file all of them. So this would be a tip for you, and knowing that why people file extension, not because their tax preparer got COVID, it is because there is a strategy in there for you to file extension. All right. So I want to remind you that 2020, when 2020 was here, we were filing 2019. And that year, the tax due dates are so different. Am I right? You remember. And so if you happen to file 2019 today, and your tax preparer need to adjusting their calculation on the due date, late payment penalty, all of that need to follow because it is not the same. And be really careful because IRS not going to do that for you if they know that you overpay taxes. And the system needs a lot of adjustments, and here and there they're disconnected. So they're still giving you these notices seems to be really big amount for you. Then maybe your question is my due date calculated properly for my 2019 tax return? So now we're in 2021, same question. Is my 2020 tax return due date calculated properly for filing? Okay, so these are the things I like to bring to you, and we don't really, I didn't really have other content um, prepared or planned to talk, and I just want you to know that today is about 2 weeks away from September 15 due date. September 15 is 1065, 1120 as due. Okay, if you have a small S corp and you have a partnership that is due on September 15th. And if you do not submit your taxes on that day, and you for sure will get penalty and for late filing. And if you ask me, oh, what is my penalty on late filing? The easy way to calculate that would be $500 per partner on your tax return. That could be a very general calculation, but typically works. And so that's how much you would pay. And normally we see penalty notices for people about $1,000 to $2,000 if you didn't file on time. After September 15, you have October 15, that is your 1040 due date. And if you don't owe taxes on 1040 due date, and typically you don't get any penalty just because there are taxpayers doesn't qualify to file taxes. They don't have to file. But of course, during the pandemic years, we ask you to file because that's how you would get your government free money, right? Those rescue money that they send out to individuals, and those are based on your tax return. So even if you feel like you don't need to file, you don't owe, or you don't qualify, I always say that if you don't file your tax return, your return is always open. There is it's almost the difference is between the missing person or the person is dead. If the person is dead, there's no more history to it. But the missing person can come to life anytime, right? Your tax return is the same thing. If you don't file it, it will never die. Because when you file your tax return, generally speaking, you can think of it as dead after 3 years because there's a statutory limitation. IRS not going to go over 2017 to audit you now because it's done. It's over statutory limitation year. But if you never filed it, what's going to happen? You never die. So if something came up, they could ask you to file a tax return way back, way back. So that's where I say that you file. October 15, make sure you file your return. If you are the person listening to me today and have like 10 years didn't really file, and then now get a lot of notices, it's all in your shoebox and just didn't really want to deal with it, what can I say? I think you need to meditate and you need to come to focus and bring your life together because tax doesn't go away. It's almost like everybody dies, but tax doesn't go away. It's part of definite, it is part of thing a life will bring you. So just do it. Okay. There's not much to debate about. All right, our 3 p.m. webinar. See, even though I am quarantined at home, I'm still giving the 3 p.m. So we're committed. We are dedicated to what we want to do. We want to bring you new knowledge all the time and get connected between you and me and my firm and everybody at Community CPA. And we want you to know that you can count on us. Go to our YouTube channel. You know how to go to our YouTube channel? You go to YouTube, you can search Community CPA. You'll get it. You'll see all the videos, and I'll look a lot better on the previous ones. And I can see the age coming creeping in for my videos, and I really don't know how to stop it. But you know, whatever what it is, it was what it is, right? So you can watch our video, and our staff, they're all better looking than me, and they're all on the video, so you can watch them and learn from them as well. And of course, our firm is a firm that we open on Saturday. I want you to know that we open on Saturday. So if you call us on Saturday, there's always people, real people talking to you. And we have a lot of clients from all over the country because of our webinar. So hopefully you enjoy it. And I certainly enjoyed quarantine at this time. And I hope that you have a very safe rest of the fall. I will talk to you all again. I hope you enjoyed the video. Bye.